I'm actually sending you this report about a day late. I usually am doing this report either Friday during market hours or actually Thursday night, but our 2-year-old daughter has decided to stop sleeping in the night. And so this has been very disruptive for Burgess and my life. Our son is an incredible sleeper, and up until this week, our daughter Ever has been an incredible sleeper too. So things were just a little off this week. So where my attention is going this week, it's actually going to three different places, but I'll tie it up into one area. And the first place my attention is going is really how this is a 100% Fed-driven stock market. And we could replace Fed with the Bank of Japan, or not replace, but include in Fed-driven, Bank of Japan-driven, maybe even central bank-driven is probably a more accurate way of saying it. And the reason I want to point this out to you is no macroeconomics are needed, no fundamental analysis is needed, no technical analysis is needed. You don't need me, you don't need anyone else, you don't need your Merrill Lynch financial advisor. As long as the central bank driven inflation is happening, it's really just buy and forget. Don't worry about it. Everyone's getting rich, taller, and better looking. That is, of course, as long as the Fed and the central banks stay printing. The question always is what happens when that ends, and it will end one day, and unfortunately, probably in a disaster for most people. But for right now, this is a 100% Fed-driven stock market. I wanted to bring that up because over the last week, I've had a few people talk to me about, what are the fundamentals and what are the technicals saying with the stock market, and all of that's out. This is just money printing galore. And luckily, we have two strategies, the market probability strategy and the obvious trend strategy, that are absolutely taking advantage of this money printing. But what's interesting to me is what is happening with the US dollar. So I'm moving my attention from the stock market. And I didn't not have a price chart for the stock market. None needed. It's going up. But what's interesting to me is the US dollar is only up 5% this year. And why that's interesting to me is because, as you know, Kurudo and Abe over in Japan, they just took. It used to the U.S. dollar used to only be able to buy 78 yen per dollar, and now we're at about 102 yen per dollar. So what is that? About a 30% rise. And what's amazing about that is, in that time, the U.S. dollar has only risen 5%. And if you look at the screen here, you can see that black line above the '08 and '09 and '10 peak at about 89. So from a probability point of view, it looks like we're at about 84 right now in the US dollar exchange. We could probably get to about 89, so we can get maybe 5 more points from here, which is about 6.5%. That's looking like the highest the US dollar can go. So for all of those, and I'm not saying this is true or not true, for all of those who have said that the reason why gold has fallen 28% is because the dollar is up. And the dollar is up 15% since 2011 low. So there is that, you know, correlation between the two during that time period. But is that really causal? I don't know, and I'm saying it's not. But it'll be interesting to see when the US dollar does get to 88 or 89, which it looks like it wants to. Which leads me to, I don't think it can go any higher because this country wants to export its way to prosperity and riches, and that means the dollar cannot get too strong, or the dollar is going to increase all of those goods getting exported. And given that this country is mining an incredible amount of natural gas, never before. We don't actually need as strong of a dollar to buy all that petrol that's coming into the country, because more and more of it is being found right here within our borders. Now, this leads me to gold, and I'll talk about silver. And a question for a lot of people is, where is the bottom? And if you look at this screen here, this price of gold goes back to the beginning of 2002, and you can see two trend lines. Right now, we're at one of the trend lines, which started back in '05. It's the steeper of the two on the screen, and we're right there at 1385. Now, the question is, will it break down to the lower trend line, which is at about 1,090? Now, if it does break down to 1,090, that's basically a 50% drop from where it was in August, end of August of 2011. So we could see this go down to 1,090. But I don't really see it going down much more than that. We're in a secular is Latin for long-term, bull market in gold. And gold, by many people, is considered a commodity or a resource. And resources have historically had very frightening, puke up your lunch type of corrections to clean out uh, all the noise, all the fake companies, all the bad run companies, and we are in that right now, and we are not through it yet. We have not finished it out, so we could see a drop from 1385, basically down maybe about $300 more. Now, if I were to zoom in and just show you what that looks like on this screen, this is pretty much the same chart, but just I zoomed in, it's still gold. You can see we're right there around that 1385, just a little bit above it over on the right part of the screen. And you can see that below that we have this long-term line here, and I said that was about at 1090. So that could, that's about another 25% drop from where we are. And again, if it does happen, I hope it happens fast, so it really, really, really has a huge amount of capitulation to it and clean out. Now, that brings my attention to silver. Here's a longer-term chart of silver going back to the beginning of 2005. You can see right here we're close to one of the major supports, which is the old 2008 high, which is right there. So that's still below where we are, and I'm going to zoom in on this in a minute. And then you can see here where silver broke out back in 2010 is right below that, and that is at about $19. So if I zoom into silver, and you can see right here at about $21, so that's $1.60 below where silver is. That's the big first support that we should be looking for. And then the second major support is that what was an old resistance in 2008 will now be the support. And if that happens, we should be looking to maybe even go leveraged into silver. So I hope this helps you to get the big picture. It is very painful right now being a silver or a gold owner. The long-term picture on silver and gold and precious metal mining has not changed. Anyone who's been in the resource business or the precious metal business for a couple decades knows that there's these huge capitulations that happen. One happened in the 70s, which was a 50% correction. And basically, the market went in the 70s from $35 gold to $200 gold to $100 gold to $800 gold. And it looks like we're right now in the going from 1920 down to something even lower. For those of you who have not seen my Peak Gold webinar that I did a week ago and last month, I think it's worth your time to watch that. I answer all the questions for people, what to do if their precious metals are in their IRAs or some people can have them in their 401ks, basically tax sheltered accounts, RRSPs, superannuations if you're in Australia. What to do if you have no money in, if you have money in and you have more money you can put in. I go through all those scenarios, I walk you through them, and then I actually stayed on the call for over an hour and took every single question that people had. So that link is there. I hope you use it. Hope you guys have a great weekend, and if you have kids, I hope they're sleeping through the night. You guys take care, and I'll speak to you soon.